Hello and welcome to our episode of FinTech Focus TV with me, Toby Babb. Today I am absolutely delighted to be joined in the studio by Tobias and Mataza from Amplifi Capital. How are you both?
Very well, thank you.
Good to see you.
Very nice to meet you. Hi, Toby. How are you?
Great to meet you. So listen, I've been enjoying a little bit of the precursor to this beforehand, finding out all about the company. Sounds like an incredible run you've been doing. You've been doing something pretty exciting in the space at the moment. We've got lots to get into, sharing your sort of story. I'm excited to put this one together, and thanks for coming in and sharing it with us. Let's kick off with some introductions first and tell us a little bit about yourselves in the background, then we'll move a little bit into the company as well. So do you want to kick off for us?
Sure. Mataza, I've been in tech for almost 30 years now. I'm a CTO for Amplifi Capital, and throughout the journey, I'm an engineer by heart, so I started my career as a developer. I try to code sometimes for fun, but I have been in tech in different domains, starting from telecoms to logistics and supply chain, and most recently in financial services. Touched on modern tech as well, so blockchain and of course AI. Yeah, that's me.
Fantastic. And Tobias?
Yeah, my name is Tobias Gruber. I'm the founder and CEO of Amplifi Capital. Started this company in 2014, as we discussed, and before that I was pretty much 30 years in investment banking. I started in Zurich in the late 80s and then came to London in the mid 90s.
Don't look old enough.
And always enjoyed finance, yes.
Fantastic. And you, as you said, it was 2014, I believe, that the company started up and had been in startup mode for a little while and sort of scaled pretty quick. Lots to get into and all that. Not to spoil everyone's fun by going into that too early. But tell us a little bit about the sort of overview of Amplify and what you guys do.
So yeah, the idea of Amplify was really, I came across this, as I said, I worked a long time in mainly sort of bank regulatory space, finding transactions in that world, and somebody pointed me to the UK credit unions. I've never heard about a credit union before that. And as I did some digging, it was clear that there was a deposit-taking institution in the UK that's not regulated under Basel III. They have a very unique regulatory framework. Credit unions, they exist by an act of parliament, which is the 1979 Credit Union Act, which in itself says that this regulation is reasonably old. But it was interesting for me to see, okay, there's a space where you can lend to, I would say, non-prime customers and grow the segment. I then looked at other jurisdictions where credit unions play a significant role in consumer lending, the US being one of them, and you can ask anybody in the US what's a credit union, they will tell you. Yeah. 40% of the consumer lending in the US is done by credit unions.
Is that right?
In the UK, 1%.
Yeah.
So there was clearly, and there's a lot of credit unions, not that there's only one or two, there was 450 credit unions when we started. The average balance sheet size at the time is £500,000. It's very, very small. And nobody in the UK actually knew what a credit union is. They really cater to, I would call, financially excluded,
yeah,
which I found that they're actually not suitable to cater, just the way they're set up. They're
this
really
is before you started the company, or this
before they started the company, yeah. And then I looked at Ireland, Australia, all the same very large credit union sectors, and if I'm in the UK, there must be a way to fix this problem here. And that was the mission. How do we get these credit unions to be real, I would call it, non-standard lenders, catering to non-prime customers and giving them access to credit, cheaper credit that they wouldn't have otherwise. And that was, I think, the mission, and it was a very complicated. As I said, the idea was interesting, but the execution was much, much harder than I expected it to be.
So let's go back on that sort of journey. So the idea was there. That's where it all sort of formed. You've seen the issue, you've seen the opportunity, you've seen the problem. Talk to us through the journey. So as you say, it was a longer startup period than was anticipated at the start.
I mean, the first big problem was that it was really hard to explain the setup to investors, because what had to happen is, since the credit unions are mutuals, they have no ability to raise capital.
Yeah.
So we needed to come up with solving multiple problems. And I give you an idea. The UK government has been trying to solve this problem, mainly the tech side. So they have no money to invest in technology, but technology is extremely important to just get into the loan market. So they funded an organization in the UK, a trade body for credit unions with £30 million to build a tech stack, but nothing came out of it. That's a lot of times the issue. So
And why did nothing come out of it?
because they're non-commercial people.
Okay.
I think ultimately you have to understand what are you trying to build for what. It's a very disjointed world, and that's a lot of times the problem with mutuals.
Yeah.
Generally, not just in the UK, that there is never really a meeting of minds. So for us, we took two credit unions that were mainly insolvent. We recapitalized them with our own money. It was quite a small problem to solve. And then
your own money, as in money
Yes.
that was sort of friends and family at that sort of
Yes,
stage.
correct.
Yeah. Well, okay.
Yeah, so we said, look, this is an interesting idea. I think that obviously there's two buzzwords that excited people. One is if you show them, okay, in other countries they're very big, and then the word disruption was very big. We can disrupt the credit union system.
Yeah.
So sometimes it helps to bring these buzzwords. But what we found is clearly that the execution was enormously complicated because it was not just a tech problem.
Yeah.
One was the technology. The second is a really hard model to explain to investors to say, well, look, there is credit unions, they need capital, but if you put in, like, make an example, we have 99.9% of the capital comes from us, but we have one vote out of a few 100,000 members. So there needs to be a governance around, the way, how does the capital go in, how do you explain that? And it was not so easy to get investors to buy into this. So eventually we said, okay, fine, we'll provide not just the technology, we provide the market access, the capital, the data, the risk management. So it became a much wider issue that we needed to address in order to get this where we wanted to. But the effect of it is, as you pointed out, is that this startup phase was much longer than you would normally expect. And as we know, most startups don't make it past the 5-year point. We somehow came past the 5-year point, but sort of, I would say, sort of limping along on a really shoestring budget, building the IT, making sure that we get enough volumes in to keep us growing until we found an investor, which we then ultimately did. Actually, somebody that really helped us grow and give us enough money to then scale up.
So that's an we'll come on to the scale up thing in a minute, but I think it's interesting about that sort of, I think people often underestimate the sort of time and the runway that they have to build those sort of things up, to get through that and to be self-funded and to go through that sort of thing. It takes both discipline, courage, and planning to get to that sort of phase, right? So I'm pleased it all came through and worked out nicely. We'll come on to the rest of the story in a second. We just spoke about the tech piece of this, right, and how important why it failed in the past and why technology is so important. You've come from different backgrounds, different environments. I always like that. I've worked in the financial services space pretty much solidly for 25 years. And one of the things I think is a real shame is how few people come from outside into in it. You're either in it from graduation and move all the way through to progress, or it's very difficult then to sort of take things over. You see people coming from certain different environments with different ways of thinking and going into it. My beef, I guess, with the to use the kids' phrase, with the technology or the financial technology space, is it's lagged behind, probably because of a lot of the regulation, understandably. Certain other areas who have really adopted technology and taken things further forward. You guys have been forward thinking in this sort of space. Tell me about your experience of that and how I guess the external world's benefited you within financial services and the sort of challenge that you've overcome within that as well.
Yeah, and significantly, when I joined financial services, it was probably 8-9 years now. A lot of the architectures which I built came from different domains, which was fairly new for financial services. And a lot of the times when I've joined a business when they've already built the tech, Amplify is another scenario, and you pick up elements of legacy architectures in there. And which is fine because it did the job at that point in time. But then when you come into the scale up, things change. But no, definitely it has significantly brought, especially when you start looking at low latency style applications, and some lending application doesn't need to be there, but you can still pick up certain architectures and components and apply to a lending space. Then things like your you had a world where you had probably around 10-15 years back when people talked about service-oriented architecture. It was a big buzzword, right? Again, a lot of organizations spend a lot of money in implementing SOA architecture.
On the bandwagon.
Exactly, right? And then quickly realize that, they've built another monolith with multiple layers or multi-tier architecture. And then now we are in the world of microservices architecture. And with the microservices architecture, now we are moving more into cloud-based architecture or cloud-native architecture, which has a lot of these fundamentals. And that's where I think one of the things which has worked with me is working in different domains. You can pick all these nuggets and try to bring them together to build the architecture needed for the business, and which has probably helped us as well.
Yeah, I think that's a really important thing to add, and I think it's interesting you said there as well that it started off with a existing tech stack that you've been through there as you by your own admission and been sort of budgeted together over that sort of phase, and then to be able to do that as a scale. We'll come on to the scaling journey now because I think this is really interesting because to go through those elongated startup periods to actually change pace and tact. That's a challenge, right? We see so many different companies go through these sort of things where either investment comes in or the world changes or something happens quickly. In technology, as opposed to anywhere else, or even more so, should I say, than anywhere else, you have this thing where the world can change very, very quickly. So talk us through the scale-up piece, and we'll come on to tech in a second, but I'm interested to sort of come back to this and say, right, what was the eureka moment? How did it happen, and how did the world change in the scale-up journey?
So moving, let's put it this way, we were quite conscious of the change of place we're moving to. So we got, as I said, we found an investor. They were extremely supportive of the business model, and from that moment in time, it was very clear we needed to now scale up.
So obviously you were kissing frogs for a while with this investment journey.
Yes.
What allowed it to be something there which, because this is an interesting thing, there'll be lots of people there who are approaching different people, trying to find the right suitor, probably going in with wrong suitors at various different stages out of necessity as opposed to design. What made it the right people for you, and how did that come about?
It's a very good question. It's a good question, and the answer is, as many times in your life, there's some luck involved. And in this case, the luck was that the person has been with us has watched us for a long time. And I think this is the key, is that you need to have a constant dialogue, because it's not that somebody comes in and suddenly says, I like that idea, and they walk out of a meeting and you've got the money. No, they want to understand who you are, how you operate, and they want to watch you for a while. So in this case, they've invested a small amount of money with us after maybe an 18 months dialogue, not a lot, so it took some time, and then they got comfortable, I guess, with the management, the platform, the idea, how it's set up, and then ultimately convinced themselves, okay, this is something we like, and we want to invest more into this. But it really takes time. In this case, as I said, it's an individual who was somewhere else, invested a small amount of money, moved to a new place, thought, okay, I can pick this up again. We were there as maybe a first project. It was this type of dynamic. So there's always mostly in life is that you can work hard, but you need a bit of luck.
Luck is one of those things that people talk about once they've done a good job, right?
Yeah.
And I think the piece there is, for me, listening to that, is far less about luck and far more about sort of doing a good job for that person who's been watching you, and then having the discipline to keep in touch. Because so often there'll be.
No, but the luck is more finding this person.
Yeah, true. Yeah.
You need to. There's a lot of funders. There's a lot of people that you compete with that offer all kinds of products. Particularly in the lending space, there's many people they look at. So I think it was just you finding this right person at the right time who will invest with us. I think that was really key. But then once this investment came, it was very clear to us. We had sort of mapped out what it is that we knew where our shortcomings were. In IT, in data, in risk management, what we wanted to build. So that was very clear. So we then we did two really conscious decisions. One, we knew we were moving from a startup phase into a scale-up phase. We knew roughly where the shortcomings in the platform were and what we needed to really urgently address in terms of better processes, more qualified people that we get into, and then we started this hiring process. But we also were very conscious that we will not spend more. We will grow the cost along the revenue line. So we did open sort of, I would call it the checkbook and say, okay, let's go out and hire, but we will only hire to make sure that we can fund out of our own cash flow.
Yeah.
That was the driver. So we did that, and then you have really two problems that you need to address. One is hiring. It's very complicated. Of course, we started with using some headhunters, and it became enormously costly. There's no way. I mean, we went from 50 to 300 people in 18 months. It's not possible to pay. I mean, I think the first month, hiring just a few people, the bill was 150,000 or something. So, guys, at this rate, we will never. So we then had to set up our own recruiting environment, and that was actually done quite effectively. Within a month we had it set up, we had a person there, we had some systems that we bought into, and we could manage this process much more effectively. But you have an enormous drag on productivity. All the people that are doing works are now interviewing, getting people new into and teaching them. They know what they do, and then the people that come, it takes them also 6 months to be online and understand what they're doing.
And
so
everyone's right.
And then you have also the jostling for positions. People are all new, and so the chaos is enormous. Yeah, you know, it's the stress on the system. People are overworked because we have to keep an eye on the business. At the same time, we're scaling up. We're trying to fix all these problems across the platform. IT is a big one, right? There's a huge amount of problem, particularly. IT security. It's a constant worry because it's an unknown.
Yeah.
And we've had problems with it.
Yeah.
And now we need to address this, and that, you know, as I said, created some chaos. And as we sort of came out of it, you would then hope. I mean, everybody tells you, yeah, you're going to be over hiring a little bit, and then suddenly you find yourself, what? We came out of this scaling up phase, and we had overhired. So then you have to reduce your staff a little bit, which is never pleasant.
Yeah.
That creates in itself enormous stress on the firm. It creates bad environment. But, you know, as I said,
How did you manage that?
Well, this was very complicated, I have to say. It was, first of all, you had to let go of people that you actually didn't want to let go of because you thought they were good. So, you know, as I said, in a small firm, you build quite a lot of personal relationships, and then you have to sort of just take a step back and say to yourself, okay, unfortunately, I have to do what's best for the firm. But you have also enormous pressure from outside investors. Everybody says, you know, guys, let's make sure you clean up. It says that we grew a bit too fast. That created also problems in the loan book, you know. So we had a lot of issues that we need to solve.
What do you think, if you were to look at this and go back and now and say, quite rightly and very, bravely, you sat there and saying we overhired at that sort of phase and we did that sort of thing. What do you think prompted that overhiring? What prompted that sort of thing? What would you do differently?
Differently, grow slower.
Yeah.
There is clearly, and you become sort of a victim of your own success, if I want to call it, because you see it's growing, you get the people, the revenue's coming in, you think, oh great, it's going to go like this forever, and then you find out it's actually not the case, and it would be smart to take it a bit easy and say, okay, look, let's build it, and as I said, this is what we want to do, but it's an interesting dynamic because everybody will tell you, I can't do my job, I need more people, and then you say, well, no problem, we can hire them, we can do this, and then you find yourself in this, and it would be better, smarter, to say, well, let's not grow in 18 months, and let's map out this scaling up phase, much more deliberate, instead of saying, oh, well, we're just going to grow along the revenue line was maybe a dumb idea. We should have said, well, let's grow lower than the revenue line, make some more P&L, and then slowly grow and focus on the things where we can.
It's difficult though, isn't it?
It's very difficult because there's a bit of exuberance, right?
Euphoria of doing that. You've been in a long incubation period beforehand, just seeing the success around it. It's a very easy sort of journey to do. And there's also challenges technology-wise, isn't there, around a scale-up sort of journey. So it's not just about the bums on seats, so to speak, but it's also the sort of challenges of that sort of developing and creaking, I guess, as you're sort of changing things at pace, changing people at pace, seeing people come into it. What were your lessons from that sort of?
I've seen this so many times. Like we scale up, and I think one of the things which Toby covered, you hire quite fast, and when you're building technology, where you say, okay, I cannot do all of these. You say, okay, let's just get one more, and that's what adds up.
Yeah.
And the complexity you create by just hiring is. Then it impacts your underlying platform architecture as well.
Of course,
Your methodologies change. The way you were delivering before and the way you're delivering now changes because you have a lot more people. You have more people to manage. You have you've created new processes, and some of these new processes might not be appropriate to the way you're running, or some of the processes might need some tweaking. So all of those challenges, they come in. Also, when you're hiring too fast, you also miss on the exact skills you were looking for, because you try to compensate on certain things. It's okay, fine, I'm getting this, at least I can deliver, some of it. Yeah? And that
so it's hiring to take the stress off the data.
Exactly. Yeah.
But as a complexity, maybe we should go into a bit the complexity of the IT increases. Exponentially, because you have suddenly you have a machine where you have to think about much more complexity, a lot more complexity. And it starts off when we program the Kanban.
So I think on the tech, when you originally build it, you never thought about at what point you're going to scale and how much you're going to scale. That's where the limitations come in, and then you're trying to stretch that piece of tech as much as possible, and then it starts cracking, right? You can start seeing. So then you have to constantly enhance the tech, and while you're enhancing the tech, that's where the complexity comes in, and then you need different kind of skill set. So you've already scaled up. Now you need to train, or you need to hire other members, and then when you've hired too many for that piece of work, that's where then we have to make hard decisions. I think another thing in scale up as well is when you're scaling up, certain decisions actually we made, where we made certain decisions where we knew that some of these platforms we can bring it in house, or create it differently. Like one of the things which we did was we built our own internal decision engine. We were using a vendor solution, and that was a bold decision. But now, if you look at it, it's in our control, and we can now enhance and scale that piece. Again, we'll have our own set of challenges when we start scaling that piece as well. So those certain decisions we made as part of scale up as well. But you always constantly have the challenges with when you have a larger team, when you've built very fast.
And the dynamics of that team, getting it on playing. And did you do this all like in office? Was it remote? Have you
mostly office?
All in office.
Yeah, we were always in the office before COVID. Of course, during COVID, everybody worked from home. And actually, I think this work from home at that time worked very well, because everybody was working from home, and nobody could leave the home. I think it becomes more complicated. It's much more complicated now, so we obviously have a hybrid model. Works, I think, to what it does. But with IT, I always find this is a good example of the pushback. So IT, they always like to develop a Rolls Royce, because that's their job. They want to do the best IT system. And I think, well, guys, what if Mini is enough? And I think this is the skill set. Is IT, you always want to right size it. And then you have to say, okay, well, we don't need more than this. It just needs to do, this is the job it needs to do. But as it grows more complex, that becomes more difficult to
it's a simplification of it, isn't it? It's common sense versus common practice, and they're two very different things. Everything you've said so far is there's nothing new. In terms of the challenges and the things we should do, but it's so difficult to maintain that discipline when everything's moving around that sort of level. So hell of a journey so far that you guys have been on from this long startup to here's the idea, everything starts to kick on, you're scaling. And then it's the overhiring, oversizing, maintaining the discipline to get back to where we are today. So what does it look like now? What's the future for the business? What's exciting? What comes up next? And what are the taking those lessons in? What does it look like over 2025 and beyond?
Okay, so I think as we said, we jolted very clearly from startup to scale up, and now I think we're clearly in a much more mature business. The chaos created, of course, with having to let go of some people. I think the outcome of it is that now you're in a phase where you have a different set of people also, because there's more governance. Decisions.
How many of that original crew are still there?
Well, that's a very good question. Not so many, but I would say
that's my point. It doesn't surprise me, because it is different phases and different people for different phases of a business.
Because when you, as I said, when you attract a different type of talent when you're a very small startup, people that love that environment and they enjoy the freedom it gives them to make decisions. Everything's fast, and the sort of like excitement about being a pioneer. And now at this stage, sort of, I call this more mature stage, you need people that are more settlers. Yeah, they understand processes, they can follow processes, they can set up processes, and particularly we're highly regulated, the governance around it. And I think, ultimately the goal is really to grow in the UK into one of the largest players in the non-prime consumer lending space across unsecured personal loans we're currently in, credit cards and car loans. That's the idea, what we'd like to get to. But it's going to be slower.
Yeah.
Now there's no more, as I said, we're not going to scale up. We're going to build stuff much more thoughtful. There's clearly enormous amount of process. To give you an idea, before when we did releases in IT, it was released and we tested it live. Didn't break down. Couldn't break down. We couldn't even dial it back. We just had to fix it in flight. Now you need a test environment. You need sort of release cycles, and it's become everything. It just takes a lot more time. Yeah. The planning of it. How do we slot it in? How do we prioritize projects and so on? So it becomes, there's competing interests, and we have to make sure that we, find the right balance to.
So how does that feel for you as an entrepreneur? And so you've gone through that sort of journey and seen your sort of, they used to say that there's different things for different times for people. Yes. You've seen both of it. It's a really interesting thing because when you talk about startups and you talk about entrepreneurs, process isn't usually the favourite word with all of that. And this feels like a real evolution for you. Yes. But it feels like something which you're grasping and enjoying.
It's an interesting problem, yes, because I became an entrepreneur quite late in my life. I was 50 when I started this, which is very different when you're very young. Because I think we need, in any instance, you need two traits that are important for a startup. One is you need a good amount of ignorance and a risk appetite that's unmatched. I think that will make you somebody who will start a firm because you have that sort of risk appetite. I obviously worked 30 years in very large corporates in financial industry, so I'm used to governance. I never liked it, and I don't like it now, but it's an important thing, and it's not, we can't do without it. But you're right, you ask yourself, well, am I really the right person? And when is somebody else maybe more suited to run this company? And I know I do ask myself that quite frequently, am I still the right person? Is this something I enjoy? And I see a lot of entrepreneurs, I go to these, entrepreneur meetings where people come in, they do startups, and there's an enormous buzz. Whereas I do feel, we're running a larger company with all the problems that come with it, also the benefits that go with it. Clearly, before you're worried about, very other things. Am I going to survive? I told people that I used to only buy myself weekly commuter passes to London because I wasn't quite sure if I was going to make it to the next week, right? Right? So obviously that's, it's going to be more settled, the business is more mature, and some of these worries go away, but there's other things that come in. You have obviously clearly more touch points with the regulator, you have more issues with employees, policies that you need to set. Yeah, do I enjoy that? I'm going to wait with the answer for that one,
And talk about the feeling. So look, we were talking beforehand about the sort of advancements of AI, data. I don't think I've done an episode for 2 years without it being on the menu. It's like AI is the buzzword of the last 12 months of FinTech Focus TV. Data's always underpinned everything everything behind it. The two are inextricably linked. This is something which you're getting your teeth into in a fairly spectacular way at the moment, I'm sure. So tell me what we can look at on the sort of tech landscape for what happens with the business.
Yeah, in terms of tech landscape, the main things which we have been concentrating for the last 6 months-ish was the foundation. So our foundation is now a lot better. We have a strong platform architecture in place. We have our data platform live now. We went live with our data platform in November. That was one of the foundation. We started on the AI journey, and I've been in AI, or especially the Gen AI piece, since 21, before the world saw ChatGPT actually. We had our first GPT application in 21. Before ChatGPT was launched. So with Amplify, what we have done here is we started building the AI platform somewhere around mid last year. So the foundation building blocks are in place. We have the data in place, and hopefully by next couple of weeks, I call it 2 sprints. Next 2 sprints, we will start seeing some implementation of use cases. But the way we are approaching is building AI as a service internally. Rather than building vertical use cases, we'll build the platform which is serving that use case. So everything is a service, and that gives us an advantage of not only using it for specific use cases, but also in live platform services. So if there are any live platform services which are being consumed, we can expose an AI service there as well. And the other cool thing which we are doing is we're creating a service layer for predicting which LLM to use, which no one has done so far. So we will try that, and we're creating our own prediction engine, which will potentially make a real-time decision as to which LLM I should use for this particular question or generating a response. So that's
no one having done that before?
There have been some instances. A lot of people have tried, but they're mainly based on knowledge stores. Rather than decision in real time, and then based on that knowledge store, based on the channel, they would then say, okay, I'm going to use this LLM, or I might use GPT or Gemini or something else. But I think the real-time switch of LLM, I haven't seen that so far. It might still be a lot of the R&D teams would have done it and kept it not visible for the wider world. But I think that is inevitable. It will happen because you see lots and lots of tools available where the tools allow you to select different LLMs. But again, you have to select some. So that will go away at some point.
So tech drives the whole piece and creates more opportunity for the business to carry on the mission to do everything else. Tobias, what are you excited about?
I'm excited about AI. I think it's definitely, it will change. I mean, we can already see it. It's an interesting one because it started about a year ago, right? Where some of these LLM come in, and you can see already.
It feels like, obviously it's been around for a lot longer, but it feels like everyone's been talking about it for forever now, doesn't it?
Yeah.
But I still remember, the rapid advance of ChatGPT, where everyone was talking about it. It's not that long.
I mean, look at the internet. I remember there was no emails when I started in the bank, and then suddenly, it became all-encompassing. I think the effective is interesting because you had probably over the last 100 years enormous productivity growth in farming and manufacturing. But service industry really has not seen much productivity growth. As a matter of fact, they seem to get less and less productive. There's more regulation around and so on. And this will clearly enable people to be enormously productive. I mean, you can see it just you're writing your emails. I mean, this has become so powerful tool. So I've seen it. You show me examples. You can talk to someone on the phone. You can't even recognize that this is So I think, I really believe this is and it's in many ways, quite frightening. People always say these are enormous changes that will lead to loss of a lot of jobs. But it was always like this. They also create more jobs, right?
They also create.
So I think when people said, "Oh, the printer's coming in, we're gonna," or the PC comes in, we're not going to need any more paper. And the paper industry was an uproar. And then it turns out people printed 10 times as much as they used to write on paper, right? So there's always seems to be an outlet for humans are enormously. Driven to do something. So they'll find other ways to spend their time or create new needs. So I think I don't think it's a problem, but for us it's very important because cost of production is very, very key to be able to compete with other lenders. So it's obviously one is the funding cost, but the other clearly is can you be the lowest cost producer? And there's a lot of cost, a lot of regulatory overhead, and I think the regulators are even supporting this and carefully monitoring, what can be done, because ultimately that will make the UK more competitive. They've always had a very competitive finance industry, and I think embracing this will help. It will make an enormous difference.
Because I think also the productivity I see the productivity should increase significantly. So with the capacity we have 200 plus employees at the moment. If we have the same capacity, but if we can increase the business, double or triple the business just by use of AI, I think that's a positive way to look at it as well.
Yeah, this is an interesting sort of thing for me. So there's two things going in my head as you guys are talking. One of which is an episode we shot recently with a guy called Ben Wren of a company called SigTech. Ben was talking about the ascent of the internet, which was supposed to explode productivity,
Yeah.
had no real impact onto the productivity. In fact, it started moving backwards. Arguably off the back of this. And we were talking about whether this was the same sort of story with AI and whether it would do it. But I just feel that there is so much that people can do, and it's so geared towards productivity. And as you said, this isn't about human replacement. This is about jobs moving into different sort of areas and making people turbocharged at what they're doing. The discipline has to be to make sure people don't just do less and get more, which is the danger of this generation, I think, as well alongside it. And I think that's a really interesting sort of challenge to be taken on with it. So there's a lot to be excited about. And the other side of things I was just noticing as you were talking through and going through your sort of journeys is it's a similar sort of thing, although in a different sort of I guess reasoning behind it with Netflix. And Netflix in the .com bubble was a company of significant size. They shrank due to the 2001 downturn, etc. And talked about talent density and talked about their sort of productivity that they got from that, and for the size of and the volume that they sort of create, their actual headcount is relatively small compared to the GP that they create and such like. And I think when you've got people left and right of you who are doing incredible things, and you're looking around and you haven't got that sort of productivity drain of other people coming through, and you're not looking at that scale up, you can focus on quality. And I'm really excited about where that takes you on your journey with it as well. It feels like a really exciting time for the business. So I loved sharing the story and talking to you both about it. For people who are watching this and want to find out a little bit more, who want to get involved, what's the best way that they can reach out to you?
I mean,
Emails.
usually emails are direct. I mean, as I said, I'm very happy with. I love to talk to people about what we do, why we do it.
Yeah.
Also hear what other people do. As I said, what I find important is why these getting together of entrepreneurs and so on is important, because you can share a bit the pain. Sharing the great stories is always good, but you want to find other people have the same problems, and you walk out and you say, I'm not the only one who's experiencing these issues. They're just general, and how can I avoid them? There's some lessons, of course. It's as I said, when I started this, I talked to some people that were in their 70s and have been lending since the 60s and told me, whatever you do, grow slow. But it's like these things with experience. It's really hard to teach, isn't it? My mother used to tell me, how can you teach somebody what hot means when you have a child? The only thing, the way to do it is take the hand, put it on a hot plate, and say that's hot. And anywhere else, it's a very hard concept to grasp. Hot, and it's the same with the scaling up. You think, no problem, I'll figure it out. It's actually quite good fun as you go through this ride, and then you come out of the other end and you think, God, this was we created a lot of problems in this phase, and other issues that we had. But I think it's hard to avoid. It's just
that's the energy, isn't it? And whilst it's there, I think as an entrepreneur you've got to thrive in that sort of chaos and enjoy the sort of lessons. And the key to it is as long as you're taking taking the lessons and moving them further forward, then everything's going to be all right there afterwards. Brilliant story. Loved having you into it. Love the energy of it all. Love where you've been and the honesty of everything that you guys have spoken about so far. Plus the excitement of what's happening and where the tech can go and what's next for the business. So thanks so much for coming and sharing it with me.
Thank you very much.
Thanks for your time, Toby.
Good to see you. Catch up soon. And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.